What is a good price to buy Alibaba right now? Hi buddy, Alibaba stocks have dropped more than 15% from its recent peak. So is this a crisis or is this an opportunity for you to invest? So in this video, I'll share with you three main things. Number one, what is Alibaba main business? Number two, regarding the recent Ant Group IPO suspension, how does it affect Alibaba? Number three, what is a good price to buy Alibaba right now? So let's go. From here, we can understand that Alibaba is a conglomerate in China itself. And these are the main four segments that Alibaba make money from, which is core commerce, cloud computing, digital media, and innovation. Based on this pie chart, we can understand that 64% of the revenue come from China commerce. And Alibaba itself also venturing into international commerce, which represent around 7% of the total breakdown. And currently for the last few years, Alibaba has been focusing a lot on cloud computing because they understand that cloud computing business is something that can scale the business exponentially in the long run. Regarding China market share itself, Alibaba actually took 60% of the whole domestic market. So from here, we can understand that Alibaba is a big player. Next, let's talk about competitive advantage. Because only when a business has competitive advantage, it can keep growing for a long time. Without competitive advantage, any competitors can enter the industry and beat Alibaba down. Competitive advantage, which is also known as economic moat. Alibaba has this very strong moat which is called network effect. So what is network effect? Network effect occurs when the value of a company's service increases for both new and existing users as more people use the service. One example is Visa. As more consumers using Visa card, more merchants are willing to install Visa card machine to accept Visa card. Vice versa, as more merchants use Visa card machine, more consumers would like to apply for Visa card so that they can pay for it. And this increases the value of Visa, and that is why Visa has been making money every single year, and the money that it generates from payment actually grow exponentially year after year. So coming back to Alibaba itself, the main business of Alibaba is e-commerce. So as more people put things inside Alibaba to sell, more buyers are willing to go to Alibaba website to take a look at what they are selling. Vice versa, as more buyers come into Alibaba website, more sellers are willing to put their items inside Alibaba because they know that there's a lot of demand for goods and services in Alibaba itself. And this creates a super powerful network effect for Alibaba to grow year after year. So this is the power of network effect. And for the past few years, companies that got network effect are able to grow exponentially. Companies like Amazon, Google, Facebook, Alibaba, all of them got this competitive advantage, which is network effect. So let me share with you the key numbers of Alibaba. Regarding the revenue for the past 10 years, Alibaba has been growing consistently for the last 10 years. So this is a very good sign. Let's look at net income. Alibaba has been growing exponentially for the last 10 years as well. So this is a super good sign. Lastly, let's look at earnings per share, which what we as shareholder or potential shareholder have to know whether they are diluting the shares or they are adding more value to our share. So from here, we can see that for the last 10 years, Alibaba earnings per share has been growing steadily. So all these three numbers gave us lots of confidence, showing that Alibaba have proven track record of growing the business exponentially. Regarding the recent IPO being suspended, how does it affect Alibaba as a whole? My opinion is it does not affect Alibaba as a whole at all. Because Alibaba main business is e-commerce and cloud computing. Without Ant Group going to IPO, Alibaba is still making money every single day. Ant Group without going IPO, does it affect the underlying business? The answer is no as well. Ant Group own Alipay, and Alipay has been making money, millions of dollars every single day. Without going IPO, they are still making money. However, if they really go through IPO, of course they got more funds to do expansion or research and development, and this may help their business in the long run. But without public funds, they can still make money. Regarding the recent Ant Group IPO being suspended, what is my opinion on it? No matter what, Ant Group IPO will still go through. Maybe it will go through next year or maybe 5 years later. No matter what, they will go through. Chinese government right now just want to punish and give a warning to Ant Group and Alibaba. No matter what, they will still help Ant Group and Alibaba because they are Chinese companies. So it's just like a father and son, a family matters. Chinese government is like a father, Alibaba Ant Group is like a son. No matter how naughty the son is, father will just punish or warn the son. No matter what, the father will not let the son die.
Oh, how much does it hurt?
So this is the exact same matters that happen to Chinese government and Ant Group right now. It's a family matters. They will still help themselves at the end of the day. Do you agree with that? So do leave your comments in the comment section below and share with me your thoughts so that we can discuss further below. I have just bought Alibaba due to the recent crash of Alibaba stocks. So at 11 November, I actually bought Alibaba stocks at Hong Kong Stock Exchange at a price of $250 per share. And after calculating for a few days, I think it doesn't make sense because it is way too undervalued in my opinion. So I bought it again on 19 November at a price of $245 per share. Disclaimer, this is not a buy or sell recommendation. I hope you actually do your own homework and understand the business a bit more before even considering invest in any products. So here comes, what is a good price to buy Alibaba right now based on my calculation. So let's go. So this is my own calculation table for growth stocks. So right now I need to plug in the current EPS and the EPS growth. The latest EPS is 55.92. So let's be conservative. I take 55 as we have to take note that this is under CNY. So we have to 55 CNY to USD as the stock price is in US dollar, 8.36. Next, we have to put in the EPS growth. Currently, the EPS growth rate lowest is 41.96. So based on this, the entry price that we can enter at Alibaba is maximum 350. Let's be more conservative. In my opinion, I will put the EPS growth is 30%. So the maximum entry price I will enter right now is 250. So this is my conservative calculation that assuming that Alibaba will still grow at minimum 30% for the next 5 years, this is my entry price for Alibaba. So if you have any questions regarding the entry price, do leave your comments below to share with me so that we can discuss further. Do remember that every single stock is a real business. By owning a stock, it means you're owning part of the business. If you are here to make any speculation or thinking of getting any get rich quick thingy, I do not have any of that and you can shoo away. If you are serious into making long-term consistent profit in the stock market, do subscribe to this channel so that we can help you in your investment journey. Hope you benefit from this sharing and I will see you in the next video.